Monk, something strange happened in the stock market today. While the Iran Israel war was creating fear across the global markets, airline stocks suddenly surged. And that confused a lot of investors because wars usually create panic in the markets. So, why would airline companies suddenly start rising? What changed so quickly that investors suddenly became bullish on the airlines? That is a very interesting observation because this rally has very little to do with the airlines themselves. The real driver behind this is oil prices. In this video, we will understand why airline stocks suddenly surged, how oil prices affect the airline profitability, and why investors watch the energy markets when evaluating the airline stocks. Once you understand this relationship, you will start seeing airline stocks very differently. To understand this rally, we first need to understand the economics of airline business. One of the largest expenses for airline is fuel. Jet fuel prices are closely linked to the crude oil price. For many airlines, fuel can account for 30 to 40% of the total operating cost. So when the oil price rises sharply, airline profitability suffers. But when the oil price falls, airline suddenly becomes more profitable. And that is exactly what happened in the market recently. When the Iran Israel conflict escalated, oil prices initially surged above 100 rupees, $100. That created fear across the market. But shortly afterward, oil prices crashed sharply as tensions appeared to ease. And that sudden drop in oil prices immediately changed the outlook for airline companies. Because for airlines, falling oil prices can be extremely good news. When oil prices fall, fuel costs decline, operating margins improve, profitability expectation rise. Investors quickly incorporate this information into the stock price. So when oil suddenly dropped, traders began buying the airline stock. But there is another reason why investors reacted quickly. Financial markets always look forward. Investors are not just looking at what happened today, they are trying to estimate what future profits might look like. If oil prices remain lower for longer, airlines could experience stronger earnings in the coming quarters. And that expectation alone can trigger a rally in the airline stocks. But the relationship between oil prices and airline stocks is not always straightforward. If geopolitical tensions escalate again and oil prices surge, airline stocks could come under pressure. Investors constantly monitor oil markets when evaluating the airline companies. Because in the airline industry, fuel prices often determine whether companies make profit or loss. So when you see airline stocks rising during a geopolitical crisis, look at the oil price because sometimes the biggest driver of stock prices is not the news itself, but how that news affects the key economic variables like the energy cost. If you want to understand how global events affect the different sectors of the stock market, subscribe to the channel because we break down the economic forces here that move the market.